Yeah, the market this morning in the last 2 days has actually been kind of calm. It finally gives us a chance to breathe here and assess where we are for the first time. Instead of react, we can kind of plan. One thing that I noticed, though, in these markets, there's a chart going around from Goldman Sachs about the bid-ask spread in the market being fairly wide right now, which, of course, is one thing that happens when market volatility spikes. I've seen a number of people pointing this as a sign that maybe there's not such great liquidity right now in the markets because of where the VIX is sitting. Of course, this is a VIX expiration week, so that's something to keep in mind. And the VIX right now sitting just flashed below 29, 28.75, suggests that this state of chaos in the market is calming down.
And VIX futures are even lower than that, 25 down 70 cents. That's another 2.5% move lower in volatility on a daily basis.
We're not quite out of backwardation yet. We're starting to normalize a little bit more. It's not as extreme as it was, at least last Monday for sure. But I suppose the question is, we think about the VIX and volatility and the market liquidity, lack of depth, suggesting that maybe we're in a new era. And historically speaking, the VIX trades around a 19. I was having this conversation with Nick yesterday, Tony. We were trying to posit where's the new floor for volatility, right? Last year, the year before, if you saw the VIX going down at 12 or 13, you're basically picking up pennies in front of a steamroller. It was hard to justify selling vol in the hole with an IVR of a 5. But is the new normal like a 24 VIX? Should we be anticipating more than a 1.5% move?
No. Why would you even say that?
Why would you even utter those words from your lips?
I'm just curious. Like, I have my answer, but I just want to know why you even think that.
It doesn't seem like the state of the news is going to change anytime soon where we're going on again, off again. So expecting a market driven with swings of 1% or 1.5% or more seems reasonable right now. And with VIX getting down into the mid-20s soon, I question myself whether or not it's worth continuing to take directional bets on a rebound moving forward, or maybe just going into directionally neutral.
Despite that, that you're going to have 3.5 more years of Trump and all the tweets and everything else, the reality is that fear is not something that ever goes up. The baseline of fear never goes up over time. Like you
get used to things.
Yes. We have too much history in our markets, and there's too much history in markets around the world. Like, you could make that argument would never
hold. Good argument, Tom.
That argument would never hold water anywhere, because you can't even maintain a VIX of 20 something, a volatility level of 20 something in China or in anywhere else in the world. So the reality is,
you can't use China as a bad example.
I'm just saying it doesn't matter. I don't mean China. Just any place, anywhere. You couldn't maintain levels of volatility.
The overall market, the most you'll be able to do is a month.
Yeah,
really,
or a couple of months, or like in the case of 2000,
relatively speaking, right?
In the case of 2008, you can maybe go 300 days, whatever it is.
Yeah.
But the reality of fear is that it is mean reverting to a long-term historical average, no matter what happens.
Does it mean price has to go back to where it was?
No matter who's in charge, no matter whatever, fear never, the level of fear that we get comfortable with, whether it's 1950 or 2025, is always going to be the exact same. It's going to level out at the exact same level. That's why that mean VIX at 18, or the actual, let's call it the median at 16, never going to change.
Right.
Never, ever going to change. It's going to get down to 12 or 13. Do you know, once I got a call from this is back in 2008, I think it is. And I got a call from, no, I'm sorry, not 2008, 2007, when the VIX was making lows at around 9. And I got a call from a Wall Street Journal reporter, and he's a really nice guy. He was new to the business, and he's like, they asked me to write an article on whether the new norm for volatility is now going to be 12. And I said the exact same thing I'm saying to you. Fear, the long-term averages never change. We're going to be, fear is not something that our tolerance for fear in whatever aspect of life it is, it's never going to change. So the VIX is, it's not going to be 24 forever. It's going to go right back down to 18. It's not going to be 12 forever. It's going to go right back up to 18 at some point. And it's going to sit there and it's going to average that. We've had years like 2017 where it was super low the whole year, and you can get that. We've had years like 2008, 2009 where it's super high for a year, and you can get that. But long term, never.
I think it's a question on everyone's mind, and I think explanation like that was warranted. We find ourselves in I'm looking forward to the market getting back into a regular state of contango in the VIX futures, Tony. That's what I'm waiting for, to be really a little bit more optimistic on the bull side of the equation. When you're looking at
the way you trade, I could see that as a logical thing to look for or wait for. I give you that. I mean, it's almost like when a batter's looking at a pitcher waiting for a curveball, or a setup for a curveball. I get it. That makes sense to me.
That's kind of where my head is at right now. I'm waiting on my pitch, right? And there are a lot of pitches that I'm seeing that, like, oh yeah, could I hit that? Sure, but it's not the pitch that I really want. I want that sinker over the outside part of the plate like Shohei does. I mean, seriously, look at all Shohei's home runs. You find the sinker on the outer half of the plate, he's hitting it over the left field wall. It's the best thing you could see him do. It's incredible. Anyway, not to digress. He's just an amazing athlete, right? So, I find myself looking at this VIX and saying, okay, I want to see the term structure. Forget the actual level of VIX. I want to see the term structure of volatility get back into a more contango state. And if we can get back to that state, then I feel more comfortable diving in with 2 feet in a directional basis. So right now, I think I'm rounding out to volatility still here, right? We have defined ranges in a lot of products right now. I'm thinking about copper. I'm thinking about bonds. I know that's not the equity trade, Tom, that you're so honed in on, but these are sitting effectively at the midpoint of their year ranges right now, thanks to the rise and then big collapse and rebound we've had. And with volatility in an elevated state, people don't need to take that directional swing, which is, again, really my forte. I'm looking at directional neutral opportunities in bonds and some of these metals to harvest the vol while it's here, because vol has come in, but it's not all the way into its historic norms.
Oh, okay. So I'm not sure what's the ask there.
What's the best way for traders to approach this now that volatility has been cut in half from the highs of 60? That's come a long way in.
That's not a reasonable thing. That again, it doesn't matter that vols was higher. It wasn't 60, no matter what. And the reality here is that it's still high relative. So,
that's the point. That's the point, right?
Yeah. It's still high relative.
It doesn't matter that the VIX has been cut in half, because the reality is that it's still very high by historical standards. Maybe this brief little window over the past week or two it's come in, but if you look back over the years, these volatility levels are still exceptionally elevated. The VIX just doesn't hang around 28 forever.
That's right. And, I mean, you didn't miss it at 40. You didn't miss it at 35. You're not missing it wherever VIX is, where it's 28 right now. Yeah. You're not missing anything.
Still plenty of time. I could make a good argument that now, with volatility contracting, expanding the way it did, contracting the way it is now, and still having room to the way down, that this might have been the better time to start putting on.
It's not a good argument. It's the best possible argument you can make. You couldn't.
Doesn't mean we can't have a move down like that and volatility expanding again, but it'll probably
you couldn't have known that before.
No. Hindsight trading here, 100%.
Right. You couldn't have known that before, but the reality is, getting in now after missing all the last couple of weeks is the absolute best thing in the world. But the problem is we're not capable of that kind of timing. Nobody is.
Yep. I wish we were.
I would agree.